Motilal Oswal, AMC, joins us live. Manish, good morning. Thank you for joining us. Manish, I guess depending on whom you're asking, you will get a different answer. The bulls would insist that Indian markets have managed to bounce back and Nifty is up more than 250 points from the recent low. The bears would argue, look at crude, look at rupee, look at global cues. This is as good as it gets. We are not going to go anywhere.
In spite of all the negativities, markets are still holding where they are holding. Are we there for some fresh negatives in terms of rupee depreciation, etc.? Only time will tell. And that's a big worry because come the month of September, October, we have to deal with a new variable, which is how does emerging markets behave in the wake up of the tapering by the Fed. On the flip side, if you see all the negatives, more or less they are there, corrective action being taken by the government should start to play out on fundamentals, although in the medium term, not so much on the immediate side. But markets are all about looking into the future, and so maybe they are pricing in what they are seeing in the medium term. I would tend to think that it's still not a rotation trade which is to play out in the Indian markets. It's the same story which is going to continue. Because if you look at the corporate earnings, the four sectors that we have been talking about, whether it be IT, pharma, telecom, or the consumer space, and within that the FMCG space, they have delivered the numbers. They are talking about top line growth of around 15%, PAT growth of around 15%. But look at the other sectors. Aggregate numbers are bad, and within that, the beaten down sectors have really not done anything. In fact, the situation continues to get worse. So unless and until these four sectors crack, I don't see the markets cracking big time. But if there was an exodus of capital by the FIs, then you will have to see these sectors also move down. But maybe it's a bit too early to take that call right now.
Manish, so what happens? Firstly, is this just a bounce back in an otherwise downtrending market, or do you think the Nifty would go about in a range of, say, 5,800, 5,850 on the upside and 5,500 at the bottom would remain intact?
Indian markets are clearly in a trading range. It's foolhardy to think that Indian markets can bounce above 6,000 in any case. So it is all about stock specific, and the range of the market will be anywhere between 5,500 and 6,000 odd levels for the next 3 months, 6 months, unless and until we see something dramatic happening, whether on domestic macros or internationally. It's all going to be stock specific, and markets will remain within that 10% range. On the upside, 6,000 is capped, downside maybe 5,500 is capped.
Manish, how would you approach a stock like Titan now, where the business environment is certainly looking rather challenging?
It's a clear sell. It's a clear sell because again the business model is now changed. There was some hope that lease has come back, but now it's upfront payment, so your interest cost is going to move up some 3 times from what it is currently. It's going to have an impact on your ROE and ROC. So, gone are those days of 55-60% ROC, working for Titan. Now it will be closer to 30-35 odd percent. And then we are anticipating that gold demand is going to remain upbeat, even in the wake up of whatever we are hearing in the global arena. And in fact, gold demand is down on a global basis. So assuming demand remains constant, working capital is going to move up. There is going to be a physical shortage of gold, so spot premiums are going to move up, and valuations are very full. So, it's a sell, clear avoid.
In fact, CLSA as well has downgraded Titan to a sell from the earlier buy. The target price as well has been slashed to 245 from the earlier 315. That is CLSA on Titan, and a whole host of other brokerages as well. And they all have soured the sentiment on Titan, which has started off sharply lower. It's a gap down start, 12.5% lower, and still counting for Titan. 240 is where that stock is. On the flip side, Tata Motors has started off just about decent. Manish, what's the call on Tata Motors after the monthly sales data that came in on the global front? That looks impressive. Would you say that perhaps in the near term the stock has some upside?
Yeah, I would think so because the upbeat sales numbers which we have seen is on the back of Jaguar sales moving up very sharply. So you have a whole new series of Land Rover sales which are going to come in September, October. So, that bodes quite well for the volume numbers of Tata Motors. I think ultimately the stock is going to trend based on how bad the domestic situation is. But Jaguar is doing quite well. Land Rover volumes are yet to come, and it's going to be quite strong. The management is guiding something on in those lines, and valuations are very comforting. So it looks like a good buy, I would think.
Manish, of late, banks have suffered a lot, and it is banks which really have led the decline. Do you think from these levels, banks are unlikely to lead the decline, or banks will continue to remain under pressure?
A bulk of the pain seems to be there in the PSU bank names, and private sector banks have also suffered, after that RBI move. But growth outlook remains quite weak for the banking sector as a whole. I don't think it is a sector to be equal weight or overweight at this given point in time. It depends on how much underweight you want to remain on banks. I mean, for my portfolio at least, I am underweight on the banking space, but within that, focus on quality names, those who have a retail portfolio as opposed to project financing, more skewed towards working capital loans, and those which have a good liability franchise. So banks which have a decent CASA ratio, less dependent on wholesale funding, those would be the banks that should be preferred, I think.
So would you say HDFC Bank is still a buy because it's a retail dominated bank, they've got a strong CASA ratio and their dependence on the wholesale borrowing is less. So HDFC Bank is expensive. Do you think it's likely to remain expensive in the near term?
It would. I mean, the bank has also seen some correction of around 15 to 20%. But I think the franchise remains intact. CASA is a big help to them in terms of maintaining their margins. Portfolio is absolutely retail, 50% is retail book, and still growing at 30%. So, times are challenging. If the bank continues to grow at 30%, market would tend to give premium valuation. So we are maintaining buy, and we are buying it in our portfolio as well.
Manish, what about IT? Is it time to start taking some profits off the table?
That's a tricky one, but I would think large cap IT names should see some correction from these levels. Valuations are quite full. You don't have too many decent names in the mid cap IT that you can bank on. So best case scenario would be a hold, but if there was an up move in IT on the back of rupee depreciation, I would think it's a case for a taking off profits from this sector.
At the current juncture, are you buying more of the same existing stocks which you advised our viewers last time, or now you are seriously shunting in and out of new stocks in order to align your portfolio with the new economic reality?
I mean, we were never there in that rotation trade where the market keeps on playing time and again, this high beta, etc. So I've been focusing that, sectors which would do well for the next 6, 12, 18 months should be the same IT, pharma. Telecom is one new space, but I don't know what to buy in that space because you just have two decent names. One has an Africa problem. Second, the valuations are more or less full. But if you take a business call and RPN moves to 60 paisa, then this is one sector which would do well. So watching out for telecom to include one name. Valuations are a concern at this point in time. So entry point is to be decided, and selective consumer names. I think we are just maintaining and staying put with those names. These are times when you avoid making mistakes rather than trying to take too much of risk on the portfolio. The best idea is to protect capital, and then look at generating returns.
Top consumer names also of late have reversed. HUL is down about 100 rupees from the recent high. Glaxo Consumer has taken a knock. Nestle is not going anywhere. ITC is also looking rusty. Since you own a little bit of ITC and a lot of good and Glaxo Consumer, are you worried about the recent price action there?
No, but if you look at the fundamentals, the numbers are coming. So, how do you align your buying selling decision with the realities on the ground? You look at the corporate results which have come, And the numbers are decent in a tough environment. If the numbers are coming, there's no reason for us to take a contrary decision to what we are doing, because over a period of time the growth numbers will take care of the valuations, and if the prices have come off from their highs, it's even a better case to buy into these names, I would think.
Manish, what did you make of the metals bounce that we saw, start of this week? And would you say this is just because of some positive rumblings from China, or it's more to do with the technical rebound, considering this entire space has been so beaten down?
No, it's more to do with China rumblings, and there's talks of stimulus going to take place in China, and these are short-term restocking initiatives happening in Europe because European economy is coming out of recession, and so on and so forth. But again, in the metal space, if you look at iron ore, it is in a seller's market. So that space has total different dynamics than maybe the steel space, where there is oversupply, glut. These may be very temporary. On non-ferrous metals, aluminium is in a different trajectory. So Hindalco is is better placed as opposed to, let's say, zinc or lead or anything like that. So again, on a broader basis, it's more to do with China trying to give more stimulus, restocking initiatives. But it's all going to be iron ore is in a bull market, I would think, but not so much on steel, where oversupply is a concern. Aluminium is okay, I would think.
Manish, of late, volatility has been the key talking point. It's been extremely difficult to pinpoint the market direction because we've not trended up in a particular direction. So do you think broadly for the Nifty, 55,600 is where you should be a buyer, and closer to 6,000, 6,050 you should be a seller, because we are trading in a range? Yes, there is some sectoral rotation is happening within that range, but the broad ends of the range are still intact.
Yeah, I would think 5,500 seems to be a floor as of now, unless and until we see a massive exodus of dollars on the back of US tapering, and that remains a worry for the month of September, because yields on US treasuries are starting to move up, and there could be a big movement of foreign currency out of the country. But if that doesn't happen in a very big way, I would think a trading range of 5,500 to 6,000 still holds.
Before we wrap, give me a Nifty 50 stock which you own, where you are allocating disproportionate amount of money, and we are confident of a 30-40% upside in next 2 to 3 years.
I think Nifty 50, HDFC Bank has been giving you 20% sort of a returns every year. So you can look at HDFC Bank even in beaten down cases. Bank continues to deliver. So that is one Nifty stock where we are reasonably positive about going into the future.
Fund document or your PMS document says that what has worked in the past may not work in the future. Are you still confident of HDFC Bank working in the future? It's been a stellar outperformer.
Let's hope so. I mean, that holds true. But I think if the profit numbers are anywhere between 25 and 30%, the returns should come.
Okay, Manish, good chatting with you, and appreciate you taking the time out and joining us on the show. That's the view coming in from Manish Sonthalia.